Kelly Fitzmaurice here with the Cade Group.
And I'm Hannah Canaletti with the Cade Group.
And today we are here to provide you with a market update for the greater Phoenix area.
Let's do it.
Let's dive right in.
So I'm going to share my screen with you guys. Okay, perfect. So first of all, we wanted to talk about growth. We wanted to talk about all of the companies. These are just highlighting a few, but all of the jobs, companies, growth that's coming to the Phoenix metro area.
Absolutely. And something to note here is we're still a really young city. And as we talk about the outskirts today, there's so much building. Companies are going into a lot of those areas that are on the outskirts when we talk about the greater Phoenix area. And something that's really exciting when we go to the next slide, we are going to be looking at the different areas that are going to be expanding their highway system. So really exciting for the town of Maricopa. There's going to be more than one way in and one way out.
Yeah, so even cities like Buckeye, Queen Creek that, typically have, like she said, Hunt Highway goes out to Queen Creek, kind of one way in, one way out. Mm-hmm. They are going to be expanding those freeways. So long projects, they'll take a little while, but in the long run, for home values in those areas and for people interested in purchasing in those areas, I think it'll be huge.
Absolutely.
So kind of piggybacking off of that, we just wanted to dive into all of the cities in the Phoenix metro area. We break them down. There's 17 major cities, and we wanted to show you kind of where they're at as far as balance versus seller markets.
Yeah, we're still in seller markets in all the areas that have kind of already been built out. So the areas that you notice are more balanced, potentially dip back into the buyer's market, it's going to be on the outskirts, and then we always see that. And going into the fourth quarter of the year, historically that is the best time for a buyer because we have more supply than what we usually have the first part of the year. And a lot of people going into the fourth quarter lose their motivation to kind of get out there with the holidays and everything coming up. But it's a really good time for a buyer to potentially buy in the fourth quarter.
Yeah, and you'll notice, like Kelly said, some of those outskirts towns, they kind of fall into balance a little bit quicker, Queen Creek, Buckeye, and then cities like Chandler are really holding strong. Anything above 100 is considered a seller market. So with Chandler sitting at 201, very strong seller market, and it kind of goes down from there. But still 13 out of 17 cities are considered seller markets.
Going into the next slide here, what do we got going on here? Your favorite topic.
We wanted to touch on the Cade-Schiller index specifically because I know a lot of people get their information from Cade-Schiller. Here's the thing about it. It is a 3-month moving average released with a 2-month lag time. So anything that you're seeing from Cade-Schiller, we've lived it, we've experienced it with us being boots on the ground in this actual city, selling real estate. Those numbers are very dated. So we like to focus on the Cromford Report, which is a monthly average. And this is it's very much a leading indicator versus a lagging indicator. So we wanted to talk about average sales price per square foot with that moving average. So October to October, we're up about 1%. And these are kind of numbers. Cade-Schiller is just now catching up to us on, oh yeah, home prices are they've gone up. Price per square foot has gone up, and they're not, we're seeing they're going up at a slower pace, but up nonetheless.
And this brings up a really good point. Like if you ever want to know what is going on in the market at that precise second, get a hold of us because we are boots on the ground. We stay very in tune with what's going on in the market. Now, when you're watching the news or you're getting the Cade-Schiller index report, those are lagging indicators. Like Hannah was saying, we've already lived through that and we are where we are at now, but Cade-Schiller is not going to be reporting on that for 3 months.
Yeah, they're reporting on figures from, call it, July and August at this point. So we also wanted to talk about seasonality. So we always tend to see a dip in average price per square foot over the summer because the biggest reason for that being luxury kind of takes a little vacation.
120 out, people in the luxury market are not shopping for homes.
No, they're not. And so fewer luxury sales mean our average price per square foot does come down. We wanted to show you what it looks like when you take the luxury piece out of it. There's a lot more stability in that line for single family homes that are very standard size, standard price point under, 800 to $1 million.
There's a lot of competition still out there for anything under 600,000. Those single family dwellings, they are moving very fast. They may still have multiple offers on it.
Yes, absolutely. We also wanted to talk about price reductions. So this year, I think everyone thought this year was going to be this big fallout. There was going to be this big, correction in price. And we have seen a lot more balance in our market, but our price reductions for this year is actually down about 52%. That being said, we are seeing a lot more concessions because of the high rates. So sellers aren't necessarily dropping their price, but they are coming in at full price offers with concessions to help buyers buy down their rate.
And when we talk about the buy down of rate, a lot of lenders right now are offering the 3-2-1 buy down, the 2-1 buy down, the 1-1 buy down. Sometimes, if you're on the buy side, you want a straight buy down, whatever that might be, we can help you navigate through that. And like Hannah was saying, our median house price is $440 right now. And last year at this time, it was $442. So that's only a $2,000 difference. So that's pretty much even right there, right? So it's really important to know what the concessions represent, how we negotiate that, and how we can handle that for you.
Absolutely. And speaking of interest rates, so there's a lot of people, the recession, or is a recession coming, is another big conversation. So we wanted to touch on that a little bit and just go into what does that really look like? Do interest rates tend to come down during a recession? Historically, yes. In the past 8 recessions, rates tend to respond accordingly and come down. As far as pricing, does pricing come down during a recession? Not exactly. We don't usually see that. And we also wanted to mention just something to kind of shed some light on what we're expecting as well.
Pent-up demand?
Yes, pent-up demand, absolutely. So you have the millennial generation. It's one of the biggest generations hitting that home buying age. And then you have, on top of that, the lowest sales volume year in decades, because the demand, globally, we are seeing our sales numbers are very down because the demand is down.
Now, that's not price. We're talking about overall, like sales globally are down for 2023.
So when you have all of these home buyers sitting on the sidelines, there's not a ton of sales happening. All that is pent up demand. So when rates do come down, what does that look like? It looks like chaos.
It is. It's literally, if you were taking a stroll and then all of a sudden more buyers are coming, you're going to start running to that finish line faster and faster. So, once again, getting a hold of us, having a conversation with us so we can kind of explain the process and what's going to work best for you, right? It's all about your timing, what you need. We are here to help you build your financial wealth.
Yeah, and deciding if right now, does it make sense for you to utilize a buy down, get into the home that you like at a price that makes sense, and let everyone else be, one of 10 offers down the line, and you're situated, you can always refinance, but kind of looking at those options and deciding if now is a good time for you to jump back in. So we appreciate you tuning in. If you ever have questions, like Kelly said, don't hesitate to reach out to us.
Have a great day.